IAS 34, or International Accounting Standard 34, outlines the requirements for interim financial reporting. Interim financial reports provide financial information about an entity's performance and financial position for a shorter period, typically a quarter or half year, rather than a full fiscal year. Here are some key features of IAS 34. 1. Frequency of reporting. IAS 34 specifies the frequency of interim reporting, typically requiring entities to prepare and present interim financial statements at the end of each interim period within their fiscal year. 2. Minimum components. The standard outlines the minimum components that interim financial statements should include, such as condensed balance sheets, condensed income statements, condensed cash flow statements, and selected explanatory notes. 3. Recognition and measurement. IAS 34 provides guidance on the recognition and measurement of assets, liabilities, income, and expenses in interim financial statements. It allows for estimates to be used when necessary, but requires consistency with the recognition and measurement principles of full-year financial statements. 4. Comparative information. The standard encourages the presentation of comparative information for the corresponding interim period of the prior year. However, if certain conditions are met, comparative information is not required. 5. Segment reporting. IAS 34 requires disclosure of segment information, similar to IFRS 8, for interim financial statements if the entity is required to report segment information in its annual financial statements. 6. Disclosure requirements. The standard prescribes specific disclosures that entities must provide in their interim financial statements, including explanations of significant events and transactions, changes in accounting policies, and the impact of seasonality on financial results. Going concern considerations. IAS 34 requires entities to consider the going concern assumption when preparing interim financial statements and to disclose any material uncertainties that could cast significant doubt on the entity's ability to continue as a going concern. Review by auditors. IAS 34 does not require a formal audit of interim financial statements, but auditors often review the statements and provide limited assurance. Please note that my knowledge is based on information available up until September 2021, and there may have been developments or updates to IAS 34 since that time. For the most current and detailed information, I recommend consulting the latest accounting literature or